Hello, Strategic Alpha community members. I welcome you to yet another super interesting session on Titagarh Wagons. And we'll be discussing, is it really the business of Titagarh Wagons is at an inflection point? Because this is a fundamentally strong railway stock and it has not generated any wealth for its shareholders over the past 10 years. Now, in this analysis, we will understand how this business is at an inflection point and why one needs to study this business in deep. So, hello, I am Suyog Dhavan, founder of Strategic Alpha and NISM registered research analyst. So, let us go forward and understand Titagarh Wagons. Business is at inflection point. Let us look at the key points. So, before going forward, I would like to share about Strategic Alpha VIP access. So I had shared about railway stocks in on July 4th, 2022, and my most favorite was Titagarh Wagons. If you see the listing here, I wrote it was my top priority stock, Titagarh Wagons. So keep watch on railway stocks, Titagarh Wagon, Jupiter Wagons, Texmaker are on my radar, digging deep on these three. So Strategic Alpha VIP access, if you are not a part of Strategic Alpha VIP access, do join. The link of the VIP access is given in the description below. You can join that link. So after July 4th, I also shared on VIP access about Titagarh Wagon being spotted on our earning blast screener, which I call it as PAD screener. So these were the companies which came on my earning blast screener on 18th November 2022. So the community members, the paid community members who have joined us in our mentorship program, they get access to all these screener alerts and technical alerts. Apart from that, on 21st November 2022, it also came on our technical radar, and I shared that on Strategic Alpha VIP access, where 2,685 subscribers are already a part of our VIP access and are getting benefited from the post which we do here. So on our proprietary price action screener last week, railway stocks and construction stocks. And apart from that, I also shared a presentation on stock analysis of Titagarh Wagons on 21st November. So once again, if you are not a part of Strategic Alpha VIP access, the link is given in the description below. You can join. So let us understand about Titagarh Wagons. Titagarh Wagons is a Indian railway manufacturer headquartered in Kolkata. It's a 20-year-old company. Current market cap of this company is 2,033 crore. Current price is 170. Book value is 73.8. Debt to equity is 0.39. Market cap to sales ratio is 1.02, which says that it is not that expensive from the valuation front. Promoter holding is 47.3%. Cash equivalents of 168 crore. March 2022 annual revenues was around 1,931 crore. March 2022 annual profit was -1 crore. So it has not generated any profits in March 2022. But the recent quarter which it posted, and just after that, when it posted super normal profits, it came on our earning blast screener. And that is the reason why we are taking this session today, because this earning blast which it did, it might continue for some time. So historical milestones for Titagarh. Titagarh was established in 1983. Establishment of Titagarh Wagons Limited as a manufacturing unit of freight wagons having a capacity of 4,100 wagons per year. That was in 1997. 2007 was a time when it started the first production for EMU and MEMU for Indian Railways. You can search about that, what it means. Foundry capacity increased to 25,000 metric ton from 12,000 metric ton with an acquisition of new facility. 2008 was a time when Titagarh Wagons expanded their capacity of wagons from 4,100 to 8,500 wagons per year, and it forayed into defense equipment and Bailey bridges. 2015, it acquired an Italian company and to possess a technology of EMU, metro, and propulsion systems. 2019, it secured the first order for metro coaches in India, first aluminum metro trains to be manufactured in India, and that started in 2019. So this has been a historical milestones for Titagarh. As I said, it is more than 20-year-old company. In fact, 1983 was the time when it started as a foundry unit. So it's a very old company, but after a long time, the fortunes of this company is about to change because of the change in dynamics of the sector about the railways. If you have gone through the budget, recent two budgets just after COVID, you'll understand that there is a structural shift in government's spending towards rail. And if you looked at the railway capex, even government is talking about replacing the old trains, which itself gives a big opportunity. Apart from that, more and more metro cities are getting added for metro rail, and that is also creating a big demand for railways going forward. Titagarh Wagons, which is a leader in this segment, is poised to benefit from the railway sector tailwinds. So, what are the positives here? Titagarh Wagons, as I said, it is a leader in railway manufacturing segment. It has decades of experience, long-standing relationship with suppliers and customers, favorable tailwinds from railway sector. What is the interesting information here? So, Titagarh Wagons has not created any significant long-term wealth for its shareholders. It is just up 50% since its IPO price in 2008. It's a mere 3% CAGR over the past 14 years. So it is one of the hated stocks in Indian stock market. If you have understood my philosophy, you see that most of the stocks which I talk about on this YouTube channel, most of them would be one of the hated stocks in Indian stock market, where past has been very different. Because when the past is very bad, no investor is looking at that company. That is the opportunity, because if you are able to see what others are not able to see, then you gain a big advantage in terms of valuations, and you can get a multi-bagger opportunity. So that is the reason why I look at one of the hated stocks in Indian stock market, and this qualifies my criteria of being a hated stock. However, this year Titagarh has won a single largest order for wagons in the history of Indian Railways, which is of 7,800 crore. For a market cap of 2,000 crore, 7,800 crore order, single order, it seems very big. So that is the reason why I am saying that the business is at the inflection point. Promoters have increased their stake from 45.7% in 2019 to 47.26% in September 2022, which bolsters our confidence, where promoters are increasing the stake. Ace investor Mr. Akash Bansali holds 1.2% stake in Titagarh Wagons for the past 4 years. None of the broker or analyst is covering Titagarh Wagon as per the public data. So it is under owned and under research counter. Most of the people, as I said, it is one of the hated stock, and that is the reason why. And when no analyst is covering, and when you are positive on that business, you stand to benefit from that situation, because when the company is under researched and under owned, usually it is traded, it won't be trading at a higher valuation. So promoter is serial Sikh companies turnaround expert. If you look at the history of Mr. Chowdhary, you'll understand that he has acquired many companies which were sick and turn it around and then turn it profitable. There is a special video which is about Mr. Chowdhary, who is a turnaround expert. The link of those videos I'll be giving in the description below. You can go through that link. You'll be able to understand what kind of an entrepreneur Mr. Chowdhary is, who looks at an opportunity in Sikh companies. So you'll understand what a promoter mindset is. Prior to name change, Titagarh Wagons was a foundry. Actually, it used to manufacture wagon components. Titagarh Wagon later on has acquired many Sikh units and expanded their capacity. And that this thing gives me a lot of interest, where the promoter had such experience of turning around the units, because that gives you confidence going forward also. Because one more thing is, when the business in at that inflection point where they have achieved largest order, this company will be benefiting from that tailwind. So this is the detail of single largest order ever from Indian Railways for 24,177 wagons valued at around 7,800 crores. Apart from that, looking at this, credit rating agencies have also reaffirmed the outlook for this company, and means reaffirmed rating A minus with change in outlook from stable to positive. Apart from that, they have also received an order worth 180 crore from the largest rolling stock manufacturer in the world, CRCC, for manufacturing 204 coaches for Bangalore Metro Rail Corporation on job contract basis. So the more and more details you will be able to find in annual report, and also con call transcripts. I have came up with some of the con call transcripts, because of which we'll be able to understand the mindset. Apart from that, the order size and the opportunity going forward. Let us go forward and look forward to that. And if you want to learn about how to read annual report, I have made a special video on how to read annual report. It is already there on the YouTube channel. You can go through that. Apart from that, how to generate investment ideas, there is one more video which I have made. Go through that. You'll be able to learn a lot from that. So let us go forward and understand the order book. The current order book for September, this is the total order book, which is 10,040 crore, and out of that 86% comes from freight rolling stocks, and 11% comes from passenger rolling stock. Around 8,500 comes from the freight rolling stocks. So it has well diversified. They have said it has well diversified, but as on date, the wagon division has contributed more. But what their commentary is, non-wagon division is expected to contribute more than 50% of their order book, which will reduce the dependency on order wagon business. So there are significant plans in place to participate in large value metro tenders to further bolster its place in metro industry. Apart from that, demand outlook for freight wagons from private customers is very positive. If you have seen the latest, you'd just read the news where even private players are getting active in railways, and government has means cleared a way for private players in railway segment. There is a news, you can go through that. If I find that news, I'll put that in the description box. You will be able to understand. Now, this company is well positioned to leverage from Indian railway sector. If you look at the why I'm saying so, it is because the leadership in freight rolling stock, Titagarh is the largest manufacturer of that. It has decades long experience. This is the first private manufacturer of passenger rolling stock in India. It has done one more acquisition of Italian company, which provides big strength for this company. It has expertise in propulsion and electric equipment business in India. Company has entered into an exclusive agreement with ABB to address large and growing business of propulsion equipment for Indian railways. So apart from that, it has tailwinds from growing demand, attractive opportunities, higher infrastructure spend, and policy support. With government continuing, because we have seen 10 years of stable government, if this government continues going forward, there won't be any disruptions from policy support. But that remains a key monitorable going forward, because the change in stance of government also affects this sector. So we must look at that also. So if you look at the numbers, the latest, the long-term debt in March 2022, the company had a debt of 496 crores, which has came down to as low as 24 crores, and short-term debt has came down from 365 crore to 258 crore. The net debt has came down from 819 crores to 114 crores. Net debt to equity, if you look at the net debt to equity, it was at 1 times, near 1 times. It has came down to as low as 0.13x, which is as good as a debt-free company. And because of that, because of deleveraging of balance sheet, the numbers have improved. Return on capital employed, if you look at the return on capital employed, it has grown from 0.4% to 4.5%, and return on equity has grown from 0.8% to 5.1% in first half of FY 2023. And I have taken some snapshot of the con call transcripts, which tells more about the business and the margins and outlook going forward. This is the snapshot talking about management talking about single largest order and its execution being started. You can read that all, but whatever is important, I have highlighted that in yellow. Company bagged its single largest contract from Indian Railways during the quarter, which is in fact largest wagon contract placed by Indian Railway for 24,177. And I'm happy to inform that we have already started the execution against that contract, and the contract has to be executed over the 39 months from May 2022. So which means for the next 40 months, company has to provide this 24,177 wagons. So that gives you the visibility of revenue for this company. Management on order book and completion guidance. So they have a total order book of around 10,000 crore. Most of the contracts are to be executed over the next 3 years. So indirectly, management has guided about the future revenues. So 10,000 crore, if you just divide it, because 10,000 crore will not be happening in one means at one go, it will be happening at a higher pace, like 2,500 crore for this year, 3,500 crore for next year, and ultimately the remaining part in the third year. That is what I can see this revenues going forward. And for the company which is doing a revenue of 2,000 crore, and if it is going to do a revenue of 4,500 crore, which means doubling of sales over the next 3 to 4 years, that gives a high revenue growth of 35 to 45%, which qualifies our criteria of secret sauce of a multi-bagger. There is a special video which I've made on secret sauce of a multi-bagger. The video is available on YouTube. You can go through that. It will explain you about 4 secret sauces of a multi-bagger, and it already has that's one of that secret sauce, which is doubling of revenues, possibility of doubling of revenues in 3 to 4 years. So management on railway wagon demand. In terms of railway wagon demand, the total order that they have placed around 70,000 wagons, and unconfirmed reports based on newspaper say that railways have planned acquisition of 3 lakh wagons. So they are talking about railway wagon demand here, and this coming from an industry leader tells you that what kind of tailwind this sector will be facing going forward, because most of the railways and even wagons, most of them are pretty old. Some of the replacement demand will be also coming, and some of the fresh demand will be also coming, and unconfirmed reports are talking about 3 lakh wagons. So this is coming from Mr. Umesh Chaudhary. Management on Vande Bharat trains opportunity and its size. So Vande Bharat, you must be well aware about that. If you are not, the link of the Vande Bharat opportunities will be given in the description below. You can go through that. Vande Bharat management is saying there are 3 tenders worth 400 trains that have been floated. Railway intends to replace all the antiquated passenger trains that are currently running on its system with these modern trains. That itself is a huge opportunity. And if you read the budget of post COVID, you'll understand the capex for railway was not that big, which it has happened post COVID, which government stance on improvising the railway stations, the railways, and the whole railway sector, and bringing that growth, bringing that animal spirit in the sector. The government has already provided for that, and they are very positive. But Titagarh will be a definitely a big important player in this field. The facility has already been set up. This is been said by Mr. Umesh Chaudhary. Management on metro opportunity and its size. So on metro segment, we see a large opportunity for tier 1 and tier 2 cities, and are all going for metros. And this is a very big opportunity for defense. We are also present on their defense side, but not participated in large tenders. So as we have seen here, not big revenues are coming from defense, and same will be remaining going forward also. But from the rolling stock for the wagons and for the trains, it has a big opportunity. So currently they are around 4 to 450 crores for shipbuilding, bridges and defense, but that is a small part in the total order book. Management on capex. Total capex across our 3 businesses that we are doing over the next 5 years is about 1,000 crore, out of which we have already spent around 25 to 30% in the last 2 to 3 years. So this is what management is talking about capex. Management guidance on margins. The blended EBITDA margins of 8 to 10% is what is sustainable. This is what management is saying. So 10,000 crore cumulative revenue over the next 3 years, and 8 to 10% EBITDA, you will be able to calculate what EBITDA it can make. it is quite possible that this company, if if the company as per the management guidance, and if it executes those orders, this company will be able to do anywhere between 350 to 450 EBITDA by 2025 2026. So what are the negatives, key risks and key monitorables? Usually supplies to government comes with a risk of high receivables. Though government stance has changed since 2020 budget, and government has started making timely payments, still this becomes a key monitorable going forward. Because we have seen in the businesses where like Viatek Wabag, which has won the orders for Namami Gange, and most of the government order, we have seen that earlier the stance was very slow and the payments they used to receive very late. So there was a big problem pre-COVID. But post-COVID, I have seen that the payment cycle has become fast, and there has been change in the government stance for that. But having said that, that becomes a key monitorable going forward. Fortunes of this sector is directly aligned with the economic growth of the country. So slower than expected economic growth can affect the business operations in the terms of order book visibility. So we must look at that slower than expected, which I think is not a big issue, because we are at that stage where the manufacturing sector had started booming. Because after a long time, the capex revival has started, and that won't be an issue. But this becomes a key monitorable. So if you look at the valuations of Titagarh Wagons, I'm just presenting you 10-year market cap to sales chart. If you look at from that front, it is trading at one-time sales. And during 2015 time, was it traded at a market cap to sales at of 2.4 times, and it is currently now trading near long-term average. Long-term average is near 0.9. Currently, it is trading at one-time sales. So, which says that valuations are not reasonable. Which says that valuations are reasonable, not that cheap when we used to get it during COVID time, but there was not much clarity during that time. So either you can get good prices or good times. You can't get both at once. But at this point of time, when there is a order book visibility, when there is inflection point which is visible, I think that these valuations are reasonable. So valuations, Titagarh Wagons 10-year price to book value chart. If you look at from the price to book value chart, you will say that the valuations are expensive. But for a company which has not generated any profits, means big profits over the past 10 years, how will it book value increase? Because book value only increases when there are profits flowed back to the balance sheet, means PNL and then balance sheet. Ultimately, that is when the book value increases. So book value, which was stagnant for the past long years, and when the prices rise, what happens is price to book value ratio optically seems high. So for a business, if we must look it from this context, that this we are getting a company at a valuations where it got listed. So from this perspective, if you look at this, you won't say that this is very expensive. But if you look it from the chart basis, you'll say that it is trading at a higher valuation. So for me, what I'm looking at is from the valuations perspective, we are getting a company at the same valuations during the IPO times. And if you look at the other engineering companies, because this is a business which is highly dependent on government orders, and because of high receivables in past, what happened was it never got a higher valuations earlier. But if what I'm saying about business being at an inflection point, if that holds true, and if this company has to generate that much revenues and profits, this valuation has to re-rate. Because if you look at the other companies which are in the same segment, means which are in the engineering segment, the valuations which these companies get is around 10 times book, or 12 times book, or 13 times book. There are many companies you can look at that. There is Triveni Engineering. There are a lot of engineering companies which are trading at 10 times book. So for a business which is at an inflection point, we must look it from that perspective. So let me tell you, this is not a recommendation in any type. I'm just explaining you this from an educational perspective, so that you will be able to understand how my thought processes and how we should think in stock markets. Please take it purely for educational purpose, and this is not a recommendation in any manner. So my take, Titagarh Wagon business is at an inflection point. Company is well set to deliver 10,000 crore revenues cumulatively over the next 3 years, giving a revenue trajectory of 2,200 crore for FY 2023, 3,500 crore for FY 2024, and 4,700 crore in for FY 2025. So management has guided a EBITDA of 8 to 10%, which means company can do a EBITDA of anywhere between 380 crores to 470 crores by 2025. Currently, they are doing an EBITDA of just 130 to 150 crore, which means profitability can go up anywhere at a pace of 35 to 45% CAGR over the next 3 years. As what I said in the secret sauce of multi-bagger, the video is available on YouTube. You can go through that. The first trigger is high sales growth for any stock to become a multi-bagger. So this qualifies that. Apart from that, we must also see that how can the margins expand. But the company has clearly said that even at that such high revenues, 8 to 10% margins are sustainable. So I don't see much from the margin expansion front, but the high sales growth itself can become a big trigger for the stock price. With Vande Bharat train orders and Italy subsidiary profits, Titagarh Wagons has a great potential to do much better than the current revenue visibility. So it depends upon how this company capitalizes this opportunity, how they take these projects and complete it in time so that more and more orders they can achieve. So entirely depends upon that. But I feel that the management has all that capabilities to cater this Vande Bharat train and subsidiary Vande Bharat train order. So with Titagarh Wagons trading at a market cap to sales at 1 times and a price to book value of 2.2 times against a historic average of 1.5 times, it is available at a growth at a reasonable valuations. So what happens is this company particularly is not in deep value zone, because I would called it at a deep value zone if it would have been traded at half time sales or a price to book value of 1 times. But it is not in deep value zone. But yes, for a company which is at a growth stage, I feel that the company is available at growth at reasonable valuations. So with railway stocks in focus from past few days, Titagarh Wagons, a leader in railway space, can be in a limelight from a short to medium term perspective. Titagarh Wagons is a good way to play the manufacturing theme in India, which is itself is a big mega trends post COVID. And Titagarh Wagon is thus a potential momentum stock which is backed with great fundamentals, good fundamentals, and growth. And this was my take on Titagarh Wagons. And apart from that, what I think is, apart from that, I'll be sharing the valuation zones and long-term setup with different zones. So as you may be aware that I'm a deep value investor, and I like to buy one of the hated stock when the whole sector is out of favor. And that time period was in between 2020 and 2021. This was a deep value zone. So why I call for any company to be a deep value zone, my criteria is company should be trading at 1 to 5 p 5 year forward. For the community members who have joined with us, they know very well what I mean by 1 to 5p 5 year forward. That is when you get multi-bagger returns. And I teach that in my community. If you are interested in joining my community, the link of my community will be given in the description below. This is a paid community wherein I teach about technicals, fundamentals, value, and triggers, and how to be a holistic investor. So link will be given here. Apart from that, I also take workshops. I'll be talking about that at a later stage. So let us talk about this deep value zone. So this is the deep value zone as per my criteria of 1 to 5p 5 year forward. But now today it is not in deep value zone. It is at a growth and GARP investor zone. And that is the reason why I said that there is visible growth now, but the valuations are reasonable. They are not expensive, they are not too cheap also. So valuations are reasonable. And this is the time when GARP and growth investors are interested in that stock. And above that comes momentum traders and investors zone, because when a stock hits a fresh 52-week high or a lifetime high, that is when most of the volumes will come from momentum traders and momentum investors. So this tells you the placement of Titagarh Wagons, where it is placed at. Apart from that, I also shared about the trade setup on our VIP access. So if you are not been a part of VIP access, do join right away, because I also share these setups. Let me just show you that setup what I shared on VIP access. So on our proprietary price action screener last week, railway stocks and construction stocks, I shared it on 21st November. Apart from that, I also shared a presentation, stock analysis and trade setup with our members, the members who are learning with us. So even I think shared this earlier also. Let me just check when did I share that. So do join VIP access if you want to be a student of markets. So thank you for attending this session. Don't forget to follow us on our social media handles for dose of knowledge, wisdom and ideas. We are available on Facebook, YouTube, Instagram, Twitter. This is our Twitter handle. Apart from that, let me talk about our workshop, the upcoming workshop on TechnoValue investing. Usually I take these on Sundays. The link of the workshop is given in the description below. So if you want to attend my workshop, do register for that link. So earlier I was a blind fundamentalist and a blind value investor. And that is the reason why I was not able to make big profits. The reason for that was being a fundamentalist is just 25% work done. Being a value investor is just 25% work done. If you want to make big profits from stock market, the only way to make big profits is by combining fundamentals, technicals, value and trigger. Because fundamentals will tell you what to buy, what to sell. Technicals will tell you when to buy, when to sell. Value will tell you how much to buy, how much to sell, and triggers will help you prioritize between the bets. And after being in markets over the past 13 years, I've created this holistic strategy, which I teach in my TechnoValue investing workshop. So if you're interested in joining this workshop, do join by registering for my upcoming workshop. The link is given in the description below. So thank you everyone for attending this session. If you have liked this session, don't forget to like, share and subscribe. This will help us to reach much more people. So thank you.